Welcome, curious minds, to the deep dive. Today, we're stepping into, well, a really fast-moving world where technology and finance are really fundamentally rewriting the rules. Innovation's moving at lightning speed, markets surge and dip, and the future of finance is constantly being reshaped. So our mission today is simple. We're taking a deep dive into a stack of recent headlines, some sharp analyses from the crypto universe. We've kind of sifted through the noise.
Yeah, cutting through to what really matters.
Exactly, pulling out the most important nuggets of knowledge to get you quickly and thoroughly informed. What can you expect? Well, we're hitting a bunch of topics. Groundbreaking tech integrations, promising new kinds of apps, some, frankly, audacious market predictions, shifts in investment trends, even a look at the global regulatory race.
It's a lot to cover.
It is. But the goal is to cut through it all, deliver what's truly essential, give you those aha moments without, overloading you. Okay, so let's dive right in. Let's unpack this first one. A major piece of news about the Internet Computer, ICP, and its integration with Solana. Now, this isn't just another bridge, is it? It's not just about moving tokens between chains.
No, not at all. It's actually more of an architectural thing. ICP has integrated with Solana to enable what they're calling multi-chain apps. So think decentralized applications that aren't just stuck on one blockchain.
Ah, so they can use features from both?
Precisely. What's really significant is how they're doing it. So usually blockchains are kind of isolated islands, right?
Siloed.
Yeah.
Okay.
But here, ICP smart contracts, they call them canisters, can directly call functions on Solana dApps.
Directly call functions. Wow.
Yeah, it's not just sending assets back and forth. It means a developer could build an app that, say, uses Solana for its super fast transactions.
Right, for payments or something quick.
Exactly. Well, maybe using ICP for the really heavy computing work or storing large amounts of data, all within one app, one user experience.
That sounds seamless.
It's aiming for that. It really redefines cross-chain interaction. You pick the best bits from different chains for one application. It's a leap towards, well, truly connected digital ecosystems.
A powerful vision, that interconnectedness. Okay, so building on that, how things connect. Let's pivot to how the market is reacting, especially Bitcoin.
Always a hot topic.
Always. We've seen, what was it, a remarkable $217 million in inflows into the US Spot Bitcoin ETFs. That's pretty significant demand.
It really is. It signals something important, I think. Traditional finance isn't just watching anymore.
No, they're actively integrating it at scale.
Right. And that leads into the next bit, which is, well, is quite something.
Yeah, here's where it gets really interesting. We also have this incredibly bold forecast from analyst Brad Mills.
It's a big number.
The very big number. He's predicted Bitcoin could soar to an astonishing price of $3 million per coin.
$3 million.
Per coin. That's, what, a potential 100-fold increase in market value. I mean, when you see inflows like $217 million, that's big, but $3 million. What factors are analysts like Mills even looking at?
It's a great question. First, let's look at those ETF inflows again. $217 million. That's not just noise. It means Bitcoin is becoming much more accessible, right?
Through regular investment channels, yeah.
Exactly. For institutions, for more retail investors, all within regulated products they understand. That alone could change Bitcoin's risk profile, its market dynamics.
Okay, so increased accessibility, broader base.
Right. Now, for the $3 million prediction, look, the number itself is, let's be honest, headline grabbing. But the idea behind it...
Core thesis.
Yeah. It assumes Bitcoin's fixed supply, combined with this growing institutional integration, global adoption. It could fundamentally reprice what we think of as a store of value in this digital age.
So displacing gold or other assets.
Potentially absorbing significant chunks of global wealth, yeah. It's a very long-term view. It asks us to think way beyond current market caps, to consider a total reevaluation of Bitcoin's role. Yeah. Well, it's a paradigm shift scenario.
It certainly reframes the whole digital store of value concept.
Yeah.
Okay, so beyond Bitcoin's massive potential, let's zoom in a bit. The altcoin space. It's always fascinating to see how smart money moves there.
Often very different strategies at play.
Totally. So what seems to be accumulating for the next potential altcoin season, when capital flows down from Bitcoin.
And cascades into smaller caps looking for higher growth.
Right. So first we've got CRO, seeing momentum, rising utility with Crypto.com's ecosystem trading payments.
Makes sense. Utility often drives interest.
Then there's PI. Interesting case, looking at a potential rebound. Apparently 68 million tokens are unlocking. Could boost network activity.
Token unlocks can be tricky, but yeah, if it spurs usage, Could be positive.
And PEPE is just showing, well, bullish strength according to the analysis.
A momentum play, perhaps.
But then, the flip side. What about tokens facing a downturn? Let's talk KASPA, KAS.
Ah, yes. KAS had a huge run-up.
It did. But then, a 65% crash from its high back in August 2024. That's a steep drop.
Very steep.
But here's the kicker, the surprising part. Despite that massive decline, KASPA's top wallets, they reportedly kept buying KAS.
Still accumulating.
Yeah, it feels like, I don't know, a high-stakes chess game. What's the thinking there? Buying into such a heavy dip, what are the risks?
It's absolutely a strategic game.
Yeah.
With CRO, PI, PEP, the smart money accumulation seems tied to specific catalysts, right? Utility unlocks, sentiment anticipating growth. It's buying into perceived strengths or upcoming events.
Okay, that makes sense.
The KASPA situation, though, that's classic buying the dip, but maybe with more conviction.
What do you mean?
When the biggest holders keep buying after such a crash, it signals they believe the drop is temporary. They likely have deep conviction in the long-term fundamentals, the tech, whatever it is. They see it as undervalued.
So they're ignoring the short-term price action.
Potentially, yes.
Yeah.
Or they have analysis suggesting it's oversold. Maybe they know something about future developments. The big risk, of course, is, well, you could be wrong. The dip could keep dipping.
Catching a falling knife, as they say.
Exactly. It requires a very strong belief and probably a long time horizon to make that kind of bet. Very different from momentum chasing.
Fascinating contrast. Different strategies, different risk levels. Okay, so moving beyond individual coins and trader plays, what about the bigger sort of systemic shifts where crypto meets traditional finance? And how are regulators keeping up?
That's the million-dollar question, isn't it? Or maybe the trillion-dollar question now.
Maybe. Look at Coinbase. They're pushing the SEC for approval to offer tokenized stocks on the blockchain.
That's a huge deal.
Right. It's not just about accessing crypto anymore. This is potentially merging traditional stock ownership with blockchain tech. Could redefine trading, ownership, everything.
Absolutely. It's about using the tech for core financial infrastructure.
Yeah.
Efficiency, transparency, accessibility. The potential is there.
But that brings us straight to regulation. We've got Franklin Templeton, a huge TradFi player, warning that the EU might be falling behind in the crypto race.
Yeah, that was a pretty stark warning.
They said Europe, which was actually an early pioneer in crypto rules.
Like with MiCA, yeah.
Right. Now faces becoming just a corridor through which innovation passes without ever being retained. That's quite a phrase.
It paints a picture, doesn't it? While the US and Asia are seen as, well, maybe moving faster or being more adaptive.
So how do these two things connect? Coinbase pushing innovation in the US, and this warning about Europe potentially losing its edge. What does it mean globally?
Well, they connect directly through that idea of regulatory environment, right? Coinbase's move shows the potential. Financial giants want to use this tech for regulated traditional assets.
But they need clear rules to do it confidently.
Exactly. That kind of innovation needs a supportive framework. Franklin Templeton's warning highlights the consequence if you don't provide that clarity, or if your rules become perceived as too slow and restrictive.
The innovation goes elsewhere.
Precisely. Talent, investment, the actual building. It flows to regions seen as more welcoming or proactive. If Europe becomes just a corridor, it means the core innovation might happen in the US or Asia, where they feel there's a clearer path forward.
So it becomes a real competition between regions based on regulation.
Absolutely. It reminds me a bit of the early internet. Some places jumped on board quickly, others were slower, and you saw the long-term impact on their tech industries. We're seeing a similar dynamic play out now with crypto and blockchain. Regulatory choices today will shape who leads tomorrow.
What a race indeed. Okay, wow, we've covered a ton of ground here.
We really have.
From that ICP Solana integration showing new ways blockchains can work together,
The multi-chain app idea.
to Bitcoin's big inflows and even bigger predictions, the different plays in the altcoin market, whether it's accumulating on strength or buying those deep dips like with KASPA.
Right, the contrasting strategies.
And finally, this huge intersection with traditional finance, like Coinbase's move, and the critical global race for regulatory clarity that Franklin Templeton highlighted.
It all ties together.
It really does. And understanding these specific things, these shifts, it helps you, the listener, stay informed, stay prepared in what's clearly a super rapidly evolving digital economy.
It's not just about the price charts. It's the underlying tech, the strategies, the regulations.
Exactly. It's about how we'll interact with technology, how finance might work down the road. So here's a final thought to chew on. Given everything we've discussed, seamless cross-chain stuff, tokenizing stocks, this global regulatory race, what do you think is the single biggest question that pops up? The biggest question for the future of finance and technology?
That's a good one to leave people with.
Yeah. Think about the implications for how you understand things, how you might engage with this digital world as it keeps changing. Lots to consider.